Hello, everybody, and welcome to episode 47 of Bank to the Future Live. Let me make sure that all my notifications are off so we don't get disturbed. But today, the topic is lots of questions that I'm going to be covering. So it's going to be very much a AMA session. So please do get ready at the live chat. But the main topic is I am just here at the Satoshi Roundtable conference in Cancun. And I've got back from the US Roadshow, and I'm going to be sharing everything that we learnt at the US Roadshow in terms of what's happening with the US, what's the latest with crypto in the US. Obviously, US investors have been shut out of many investment opportunities, and I'm going to share everything that we learned from visiting the different regions in America on the US Roadshow. So let's just jump straight in. Remember, if you've got questions for me, just use the comment section on YouTube, or if you're on Twitter, use hashtag BFLive, and we'll try and pick out those questions. Or if you're in our Telegram community, it's at BF_token. That's at BF_token. And you can join our community. Please beware of fake accounts, scammers, people trying to ask you to send money. We will never ask you to send money. All investing always happens through the platform. Don't pay us to give you priority support. We will not ask you to send money. Please beware of scammers, impersonators. So let's just jump straight in. So today we're going to cover what's happening, what's the latest in the US. We'll then be going through some portfolio news, and then we'll take many of your questions as a result of our recent announcements. Been lots of confusion, so I'd like to clear up some of the confusion and make sure that we take any new questions that come through as well. So let me just pull up my show notes. I'm going to switch off my camera. No, I'm going to keep my camera for the US Roadshow part, and just pick up my show notes so that we can go through everything. A few announcements before we start picking up on the US. We just closed the Robinhood round. So congratulations to all investors that got in the Robinhood. That's a unicorn app that supports free trading of stocks, cryptocurrencies, and is on a really high growth path at the moment. That's one of our more higher valuation deals that is lower risk because they're further along the chain, as opposed to our more earlier stage deals, which are higher risk, higher return, because you get a more favorable valuation the earlier stage the company is. So first thing, I had the opportunity to meet one of my mentors, as it were, from way back before Bitcoin, which was Neil Ferguson. And Neil Ferguson was the author of the book Ascent of Money. What was really interesting is in our meeting, we got to discuss more about Bitcoin and cryptocurrency, and he was sharing his stories about how his son got him into Bitcoin, and he kind of ignored it for quite a while. But now he was giving me feedback in the academic scenes of how the most mainstream economists in the world that are advising the Fed and the Treasury and really having influence in terms of the academic side into monetary policy and everything, and how much they are actually ignoring and discounting crypto at the moment. So Neil Ferguson saw an amazing opportunity to prove most of the mainstream economists wrong in a unique one-time situation. But for me, it was a personal pleasure to go meet him, because Ascent of Money was, for those of you that haven't read it, it was a 2008 book, if I remember correctly. It was published before Bitcoin white paper, or around about the same time. And it went deep into the entire history of money, and it was one of the pivotal books that I read in terms of understanding more about monetary history. He recently rewrote the book and included some cryptocurrency element to it. So it's really fascinating to see how cryptocurrencies leading to the rewriting of economic books and literature. And there was also a BBC documentary right after the book a long time ago And that was round about the time when I was writing the first draft of the book, Bank to the Future, and I was involved in the monetary reform community prior to the Bitcoin community becoming a thing. So that's really one of the first things. Now, one of the really interesting things is it did trigger off a memory. It was Neil Ferguson that actually came up or coined the phrase Chimerica, and it's the relationship between China and America. Essentially, the economies are intertwined, and it's really relevant today in the trade wars that we're currently experiencing. Essentially, the relationship is that China is the largest investor in US treasuries. So the US currently, it was the US debt was probably below 2 trillion at the time when the book was wrote, but it's now up to approximately 24 trillion, an incredible Ponzi scheme backed by the US dollar. But essentially, this relationship is that China is the largest investor in US treasuries, and therefore the US is in debt to China as an economy. Chinese investors, and also that the China is exporting the vast majority of goods that America consumes, but America is a statistically significant consumer of those exports from Chinese companies, and therefore, no matter how bad the politics gets, they have to figure out a way to work together because China doesn't want to actually lose their investment in US treasuries through the collapse of the dollar until they start actually hedging. And that brings us to today, which is a really interesting time with the People's Bank of China, the Central Bank of China, making big moves to launch their own digital currency in what I see as a hedge of bets and a currency war move in the trade war as the relationship between China and America gets more and more politically charged. In order to replace the US dollar or have an alternative to the US dollar. And also, it was fascinating to see, obviously, very unfortunate situation with the viruses that are actually happening in China right now. I got to meet many of our contacts from China that were actually in San Francisco at the time while I was there. Because they can't fly back because of the crisis at the moment. But it was fascinating to hear their feedback on where cryptocurrency exchanges in China might be going next, and the relationship that we're seeing and the politics that cryptocurrency has brought about with things like Facebook, Libra, essentially giving the opportunity for US to remain relevant and get a backdoor access to all of the data in a global cryptocurrency versus the PBOC, which is China's attempt to gain control over the world's data if they can launch their central bank digital currency. Versus the situation that we've seen with Telegram, where essentially it's a Russian owned or connected entity that is pushing for privacy, and also some of the moves that we saw from the SEC, where 2 weeks prior to the token sale being launched on cryptocurrency exchanges, there was a move right before it in order to try and take down the launch of the token. In what we're seeing as a political move between US, China, and America. So it's fascinating to see that. And also I got to give some thoughts to Neil for his future research on the relationship between China and America in cryptocurrencies, with the vast majority of significant developers being in the West, not necessarily America, but America is producing a lot of the large unicorn companies in the cryptocurrency sector. And the relationship it has with the vast majority of mining happening in China, which brings us to one of our announcements that we will be making this week on the next deal to go live on Bank to the Future, which we're really excited to announce. Will be if you're a priority access member and you hold a minimum of 10,000 Bank to the Future tokens on your BnkToTheFuture.com account, then you will be receiving a notice to what we think will be probably one of the biggest deals that we'll be doing this year, although we're actually speaking to two more as we speak. but this one is just getting signed off by our US broker dealer so that we can make the opportunity available to our US investors via our broker dealer in the US. So we're just going through the final due diligence on that. Hopefully, we'll be mailing the priority access deal to our investors that hold a minimum of 10,000 Bank to the Future tokens on their BnkToTheFuture.com account or connected BF wallet. And then whatever's left after that will be available on the platform next week, which we're really, really excited about. It's a big play in the decentralization of mining space. It's a very exclusive deal. We were very fortunate to be able to get access to this deal, and it's because of some relationships that we built, and we went over to visit the team in San Francisco to complete the due diligence as well while we were there. So look out for more information on that deal. And we're looking forward to that because we believe that this is actually going to become a statistically significant company if we believe what the company is up to, and they achieve what their goals are in terms of rebalancing some of the power that's happening in the mining industry. But taking it back to the relationship between China and America, I was able to help Neil understand some of the trends that are happening, whereby the vast majority of mining is happening in China. The vast majority of applications and development is happening in the West, although it is a global phenomenon. There are many of the developments are happening there, and therefore they kind of have a chimerical relationship as well, whereby within the Bitcoin industry and ecosystem, whenever there are politics such as the scaling debate, where developers wanted something to push in a certain direction and miners wanted to push it in another direction, they still have to try and reach consensus on a global scale. And the two are really dependent on each other, which contributes to some of the decentralization effect, although there are pockets of centralization in different parts of the Bitcoin ecosystem. So it was a really fascinating discussion. It was great to see that. And also Neil has committed to doing more academic research and unifying and really shaking up some of the misperceptions within the mainstream economist field and academia field. So really look forward to seeing what comes from that. And it was a great honor to meet somebody that was so instrumental in being a part of monetary history and educating the world on that. So that was the first part, and got to meet Neil in Stanford University. The next part, what have I got here? The other part is a real big shift back to equity from tokens. So as many of you may know, we were pioneers in bringing equity in crypto companies to our investors on our platform. We had several big winners for our investors that generated a lot of wealth. The first was equity in crypto exchanges that have gone on to become the most profitable and unicorn status like companies in our industry. The second was securities that paid out dividends in Bitcoin, and then the Bitcoin performance drove really high returns for those that held on to their dividends, and also securities that were backed by Ethereum mining that we launched, and the Ether that we paid out thousands of Ether every day at a low of $1, and some of the exit opportunities from some of the companies like Bitstamp and various other crypto exchanges as a result. Sorry, lost my trail of thought. So why was I saying that? Yes, so we were pioneering many of the securities and equity side. In 2017, we got disrupted by tokens. Our investors were demanding that we bring token opportunities to them and allow them to purchase tokens, but in compliance with securities laws. So we brought that to the market, and all of our companies were stopped actually selling equity because they wanted to actually sell tokens instead, because that's where all the liquidity and demand from was actually coming. But now we've seen a real big shift back away from tokens and over to equity. So We're getting a lot of the companies that would have been doing token sales or launch tokens that are now looking at really doing their equity raises. And we saw a real big shift away from that, particularly in the United States, where the US SEC has really been the most vocal in determining what is considered a security and what is considered a utility token, which is going to be a big topic of today. As we announced, and that we will be launching our security token. And a lot of questions have come up around how that interacts with the utility token, and people conflating the two and getting confused between the two, because a security token is essentially a revenue or equity and investment product, and a utility token is essentially for use on the very different use cases. There are some major differences between the two. Obviously, a security token, it won't be able to trade on a cryptocurrency exchange. It can only trade on a securities exchange. And whereas a utility token can trade on a cryptocurrency exchange, which is generally more accessible and open to a much wider audience and participation. So obviously the two are very different things. And it's important for people to understand that. That a security token will not be traded on a cryptocurrency exchange, and a utility token will not be traded on a security token exchange. So these are two very important things to understand, and who can actually access those is subject to a whitelisting process in the case of security tokens. And in the case of utility tokens, it's very much a much wider audience. Whoever owns the private keys to those actually is the owner of the utility token and can use them in the way. Both are very interesting things. And definitely there is a big shift in the US away from utility tokens and over to equities at the moment, and then also the birth of the security token industry, which is what we're looking to push. Got to meet many of our portfolio companies that are pushing in that direction. Got to hang out in Miami with Carlos from Securitize and get his thoughts on driving liquidity into the security token market and where the industry is going next, who actually had a big announcement this week as well, with Sony actually being one of the investors in the funding round, the equity round, that also BnkToTheFuture investors got to participate in. So that is very interesting, but yeah, definitely a shift. So that then brings us over to the 3 different locations that we visited as part of our US roadshow. The first was Miami. Now, the main purpose of Miami was to go to the North American Bitcoin Conference. And we were exhibitors and sponsors at the North American Bitcoin Conference. We got to meet many of our investors. We did a bit of a Ledger wallet branded BnkToTheFuture wallet giveaway, where if you're an investor on our platform, you came over to say hello to us. And we gave away a lot of tickets to those that were our loyal investors as well. Then you got your BnkToTheFuture branded Ledger wallet as well. So thanks to the team at Ledger for getting those out to us and being able to give those to our investors that joined us in Miami. I gave a keynote presentation where I announced for the first time the concept of how we are thinking about our security token and our security token exchange. So just for clarity, BFX is our security token exchange. And we'll be sharing more details about that as we get closer and closer to launching it. It's different from a cryptocurrency exchange because it will be focused on security tokens as opposed to cryptocurrencies, like cryptocurrency exchanges, where they're able to offer cryptocurrencies and utility tokens. Also, it's slightly different from BnkToTheFuture.com because BnkToTheFuture.com is a more centralized model. We've digitized much of the private equity process, but the security token exchange is more of a decentralized model whereby you can actually trade security tokens. And it's going to be really interesting to combine those two. We call it the combination of decentralized finance, DeFi, with centralized finance, CeFi, whereby you can achieve much of the compliance goals through platforms like BnkToTheFuture.com, centralized finance, which allows participants to onboard and then engage in a peer-to-peer marketplace like BFX, which is a more decentralized finance play, allowing people to trade in security tokens more in a peer-to-peer fashion. So we're really excited about bringing that to market, and we were getting lots of feedback and meeting lots of investors in the industry and the players in the security token space to get feedback on that. It was also interesting to see the mayor of Miami very bullish on Bitcoin and blockchain. Obviously, if they're a politician or a financier, they have to always use the word blockchain. But also, there's been a shift in sentiment around the word Bitcoin. I remember when Bitcoin was a swear word, a very nasty word for politicians to actually use, and banks tried to, capture the industry by pushing forward the word blockchain, mainly pushed forward by Blythe Masters, who was pushing forward the rhetoric of blockchain, not Bitcoin. And very much a shift back to Bitcoin, not blockchain now, after years and years and years of not seeing too much happening in the blockchain space and everyone getting excited about Bitcoin, and really Bitcoin becoming this a blue chip, reputable thing, which is very much a shift as a result of the token wave that happened when so many different tokens and blockchains are being launched. Also, I think an interesting trend is that after 2 years of bear markets, is shaking out a lot of the crappy token projects. People that are not actually working on their token or were never intending to do anything with their token. And I think that's going to lead to mass delisting, as there's been a big regulatory push, which means it's an exciting times for the tokens that are actually doing things and pushing utility and ever, continually increasing the utility of those tokens, because I think that you will get a lot of delistings from exchanges of the projects that are not really doing anything. And that will lead to a select few tokens that are actually doing stuff. Obviously, we're very active in the Bank to the Future token and really improving that ecosystem and looking at what we can do to improve that. We've got lots of exciting things that we'll be announcing throughout 2020 because one thing that's very important, I think, to people to understand is that while we launch our security token BFXT, our utility token is a hugely important part of our ecosystem. There's things that we can do with our utility token and the fact that we have a utility token that we could never do with our security token. You can't pay for discounted trading fees on our over BFX or our security token exchange or our more centralized platform, BnkToTheFuture.com, using a security token. It just doesn't make sense. We can't use it as a rewards and loyalty scheme. We can't just give out securities that are revenue shares or equity in the company. It's not a membership token. It's not a payments, rewards, and membership token so that everyone can get priority access to deals. You can't just issue more equity and various other things like you can with a utility token. So we think the two play together very interestingly, and we think we're going to see more and more of this from our portfolio companies as we prove how to do security tokens in a way that actually gets liquidity and traction. That's our goal with the new play BFX and the BFXT security token. We want to prove the model of attractive security tokens built by the crypto industry for the crypto industry, rather than really trying to push these on institutional investors. That's what we've always done best at BnkToTheFuture.com, built investment products for the crypto community, and then institutional investors come along once we prove traction and returns, especially as traditional financial products get lower and lower in terms of yield and attractiveness, as traditional money is pumping and propping up stock markets and bond markets. And this alternative industry is emerging as a result of Bitcoin. So these are the different types of things that we were discussing with people. So that was Miami. After Miami and the conference, we head over to New York. And New York is a very different vibe. New York is obviously the home to Wall Street, a different type of crypto investor. We got to meet many of the major crypto spaces. One of the comments that we were getting in Telegram, hopefully this will come up when we do the AMA, was that we were focusing on institutional investors. We're focusing on the institutional investors that have actually strategically been involved in crypto, and actually can work and support us in deal flow. And we've had a strong working relationship with them all along. We're not going up to the big traditional financial institutions that are actually not necessarily interested in the Bitcoin vision and mission, but the ones that we've always done co-investment deals with, the Pantera Capitals, the blockchain capitals, strengthening our relationship so that we can bring more deals that only they get access to, so that we can bring them to our platform investors. And by having a stronger relationship with them, it means that it's great news for our company, our token holders, and also the growth of the Bank to the Future ecosystem and deal flow, so that we can bring more opportunities that our investors would love to see. So the shift, the focus in New York was around meeting different types of investors. The other thing that I think is really interesting to get feedback on is really in New York, they were very much interested in the blockchain and how it affects capital markets. One thing that we learned, so for those of you that know our history, we actually had a broker dealer that we used through the platform and we built and were seed investors into, that we ended up selling to Coinbase because they had something known as an ATS license. Now, what we've learned from spending time in New York is that the SEC is really not interested in on-chain blockchain settlement. The companies that are looking to do stuff in the US around securities tokens, we think are not going to get what they want, which is on-chain blockchain settlement. The SEC seems to be very focused on recreating the traditional financial system as they know it and as they are comfortable with, but essentially having blockchain somewhere in the background without any of the efficiency improvements. This is one of the main reasons why we ended up selling the broker dealer in ATS to Coinbase, because they are in a position where they want to invest significant resources and times, is our speculation, into pushing forward the ATS side. But we're not convinced that those regulatory changes are going to happen in the US. And therefore, we wanted to focus on our new strategic investment in our new US broker dealer at BMI Capital, so that we can work with integrating that into a decentralized yet compliant way of doing peer-to-peer security tokens with on-chain settlement, but restricting the things that we know you're not allowed to do in the US through a whitelisting process, but not having the major restrictions that the ATS providers will have as a result of our research. We look forward to supporting our portfolio companies like Coinbase in making those shifts and changes, but we think it's a very long time. And it might even require a shift in SEC leadership until any changes happen there in order to push forward those different things. So that's just our personal speculation on where the industry is going. But in New York, it was very much focused on disruption of capital markets, and meeting some of the players there that are doing really interesting things with DeFi. DeFi is decentralized finance, certainly capturing the imagination and interest of out in New York, but obviously they've got some very challenging things there with bit licenses and regulatory moves, and a very slow moving environment, as it were, because it's obviously home of Wall Street. And Wall Street have the largest lobbying power in the world, the banks and the investment banks, the largest lobbying power in the world, and they're not looking to give up any kind of control until they own the ecosystem. So it's a very slow burner in New York, but very interesting to see and catch up with many of our portfolio companies and get that feedback. And the final move was San Francisco. And so San Francisco is a very different vibe to New York. This is the home of Silicon Valley. As I said, I got to meet Neil in Stanford University, and many of the venture capitalists that are more engaged in the crypto industry. I learned a couple of things. Firstly, venture capitalists, after 2 years of being burnt by some of the tokens, just like everyone else, is kind of out of the industry at the moment. But I think that creates a really interesting opportunity, as it seems. Please do not take this as financial advice. You have to do your own research. But it seems that Bitcoin seems to be taking a turning point, leading into halving right now, and we're in a Bitcoin-led market. Speculation on that is really interesting because, as I said, there's going to be a mass delisting of tokens, leading to a few that are actually doing stuff and providing utility, and therefore a few that are actually, as we've always seen, Bitcoin is kind of like the blue chip benchmark, and then you tend to get utility tokens and other altcoins that pump harder or slower as the industry grows. And so therefore, what's going to happen when some Bitcoin enters, if it enters into a bull market and some of the other alternative tokens start to pump harder, is I think inevitably that's going to put a capital inflow into the market again. And we can see where that actually goes, but this time with tokens that are actually really focused on building and improving their utility. And so that's why it's really important to us at Bank to the Future to continually work on improving that utility of the Bank to the Future token. And many of our community has given us great ideas, but also in a regulatory responsible way, so that we don't end up with mass delisting of tokens as some of the others are going to experience from cryptocurrency exchanges, by turning it accidentally into some kind of security or investment product. And so that's a really interesting thing. But remember, our company is a significant holder in the Bank to the Future token. If you look at the blockchain analysis, we have not touched any of our tokens. And we haven't even moved any of the funds raised in the token sale either. They're still there unmoved on the blockchain, and that's a really important asset for us. So we're all aligned in terms of our interest, so that we can utilize that utility token to grow the ecosystem and push forward the growth of our industry and sector. And that's our primary really focused thing to help people understand. Anyway, so we were in San Francisco. What else did we get? So we ran an event which we'll release the recording on the Bank to the Future YouTube channel. If you want to get a hold of that recording, we ran a really amazing event. It was really well attended in San Francisco, really high quality people out there. We invited some of our San Francisco based investors that have invested significant sums through the platform. And they, and as we now have our US broker dealer partnership, it opens up the opportunities in terms of what we can do in the United States and still remain compliant with their securities laws. But we had an event with the CEO of Binance US, and we had representatives from Coinbase, Blockchain Capital, Pantera Capital, and myself on a panel, which I think was a really exciting panel, getting the perspective of, we were talking things like shitcoins, listing policies, the crypto investment trends, how Pantera Capital, really thinking about the difference between how this changed your industry, a venture capital fund that, as you add liquidity, kind of moves to a hedge fund almost accidentally, and Blockchain Capital's investment outlook. So we will be releasing that. If you'd like to get a hold of that, then all you need to do is head over to the Bank to the Future YouTube channel. Hopefully the links will be in this, in the description below this video or somewhere. Please head over to our YouTube channel and you'll find that. And you'll be able to, if you subscribe to it and remember to hit the bell symbol, we'll give you a notice every time YouTube sends you an email, every time we put on a new video, every time we go live with our new Bank to the Future live episode, or every time we add the recordings. We got recordings from Miami, from San Francisco and from New York. I think we'll release a San Francisco recording first because it was a really epic, great event with such participation from some of our portfolio companies and the industry. So yeah, head over there and subscribe, and you'll be able to get a hold of that and keep up to date with all the moves that we are making. So let me just check how we're doing for time. So I've done 45 minutes, and my battery looks like it's going low as well because I'm in a spot where I can't actually plug in. So I think what we'll do is we'll head over now to take questions. We do have some portfolio updates as well. Covered many of those in the US section, but let's take as many questions as we can. Famida is still jet lagged as she returned from the US roadshow, and so we've got Irvin here stepping in. So Irvin, let's take as many questions as we can, and probably at some point my battery is going to die on the hour. I think we got 15 minutes till we go, so let's take as many questions as we can.
Sure. Let me read the first question. How will BF shareholders and BFT holders benefit by introducing BFX and BFXT? Will we be able to buy BFXT at the same price as the institutional investors?
So the plan is right now is that we're also getting feedback. The full details are going to be in the white paper when we actually release this. But if you are a shareholder in Bank to the Future, then the way that we constructed this is we've always looked out for our investors. Over the years, we've had to pivot in many different directions. And one of the things we did, for example, is when we had to move to a different regulatory environment and structure, we made sure that all of the shareholders that invested in a different company got shares in our parent company so that they benefit from everything. We're always looking out for our investors. Also, in good times, we also shared the profits through a dividend, which would only be to shareholders. Obviously, that wouldn't go to somebody if there was a security token. That was not the same as equity. So these are different things. And one of the structures that we put together, obviously, is that we've put BFX under our parent company so that all the growth of this new business line that was never in our original pitch or plan, Bank to the Future shareholders will also benefit to. So we haven't cut you out of anything there. And also Bank to the Future is, the structure that we've done is we make sure that you benefit from everything that we do under that. I think the second part of the question was, will people get same terms? So what we're doing with the institutions at the moment is while we're getting feedback, we may decide to actually take them on strategically in our equity round. We're not actually pitching to them to invest in the security token. That will only be available to our platform investors. So they would need to sign up to our platform in order to participate. And one of the things that we always did, for example, with the Bank to the Future token that we were very conscious of, is not giving backhanded deals or discounts or anything to anybody, making sure everybody's on the same terms. And that's a really important part of how we do things. So if an institutional investor wants to strategically be more involved in BnkToTheFuture.com, then we may open up some equity to strategic investors where it makes sense. Remember, we're not in the business at the moment, we're not actively needing the funding. We're obviously pursuing a new growth phase, and that allows us to scale it faster and do more mergers and acquisitions that we've been looking to do. But Bank to the Future is in a comfortable position to be able to choose if it wants to take on equity investors. But at the same time, the security token is going to be launched. For anybody on the platform that qualifies to invest, whether they are institutional or not. That will all be launched at the same time on the same terms for everybody. So that's the goal around that. It's not that we're pitching the security token to institutional investors first, and they're getting a backhanded deal like many of the ICO tokens did in 2017. Everything's on the same terms, and we do everything through our platform as we always have, and we're not about to change that as an organization.
Okay, we've got another question from Telegram. So each BFX represents equity in Bank to the Future? And will BFXT holders get only revenue or both revenue plus equity and dividends?
So again, we haven't actually released all of the details at the moment. Our existing plan is that BFX is not a security token. BFX is our security token exchange. We will not be, there will only be one utility token, which is the Bank to the Future token, that will get an increase in different things that we can do as a result of having a security token exchange to increase the utility. And BFXT, the existing format that we're going for, is that it's going to be a revenue share token. And at some stage that could be convertible to equity to get the value of the equity in case we exit in the future. So only shareholders would receive access to dividends. Only those that own the token would receive access to the revenue. But what we've learned from different security tokens, so when you look at the industry, companies like T0 have launched revenue share tokens, haven't performed too well because of a couple of reasons. One, it was based upon profit and the company's not profitable. So we decided to focus on revenue. Also, we have different business lines that are also generating revenue now and speculative business lines that aren't generating revenue now, like BFX. So we combine those, but also security tokens like blockchain capital, which have performed well, is because it's backed by some kind of net asset value. So we're looking to achieve and emulate the best of both those different use cases so that we can create a security token that actually it makes sense without necessarily having some of the major liquidity, but also emulate some of the successful use cases. And the whole primary goal of this is, one, to expand the business, to launch into the security token market. But really, we want to do it ourselves so that we can prove to other investors what it will look like. So then we can launch many, many other great security tokens based upon what we've learned and user experience, and being able to show our clients that want to launch security tokens the correct way to do it, the right way to do it that works. And so that really, this is an experimental thing, but all details will be released. Nothing, we're still in the phase of taking feedback so that we can figure out the best way. And we're listening to all the different parts of our ecosystem to find out like their great ideas, so that we can construct the security token in the best way possible when it actually goes to market through the white paper. So I think we've got time for a couple more questions. Hopefully my battery on the laptop will hold up. But Irvin, what do you got for us next?
Yep. So we got one question from the live chat. Can Bank to the Future shares be traded for BFXT tokens?
Bank to the Future shares are currently private at the moment. There is no market for Bank to the Future shares. But one thing we'll be doing is, if you are a shareholder, we are currently taking back feedback on the investor zone, and we're reading through all that feedback, and we'll do a private shareholder Zoom call just like this once we have the details, so that you get an understanding of how this might affect your equity position in the future. But that's all we've got for now. So head over to the investor zone if you are a shareholder, because that would be a private shareholder chat.
Okay. Next one. Will existing shareholders get BFXT tokens for being shareholders in the company?
Same answer, same question. So head over to the investor zone, participate. So there's a long thread where people are giving feedback on what they'd like to see, and then we will do a private shareholder meeting to those that own Bank to the Future equity.
Okay. When is the new tokenization initiative expected to go live, and what chain will the issuances take place on?
We haven't got a launch date yet. We've still got a bit more work. As a company, we're currently going through an internal audit so that we can put together, full, clear, and not misleading information. Once that is all complete and we've completed all our financial results and everything that we're going to need in order to make this offering, get it all signed off as well. There's still a bit of a process to go through, and we want to collate a lot of the feedback that we've learned from the US Roadshow and also here at Satoshi Roundtable. before we actually start working on the next draft of all the documents. So we'll update you. But if you go to BnkToTheFuture.com, in preparation, make sure you verify and certify your account so you are a qualifying investor. And then also there's a link on the homepage, the brand new homepage we release to BFX. Head over there, enter your email, and we'll make sure we notify you the second we have more information on the launch of BFX.
Okay, we got one question. Are current equity holders diluted?
Current equity holders?
Maybe Back to the Future equity shares. Then
Yeah, what was the question? Are they muted?
no, diluted.
Sorry, I didn't understand. What was that, Evan?
Oh, sorry. So are current equity holders diluted? That's the question. So I was thinking, um, if they hold Back to the Future tokens, and by doing or by selling BFXT, are they going to be diluted somehow?
Oh, right. Sorry, diluted. Sorry, I didn't hear. Sorry, language barrier. My fault. So whenever you do an equity raise on any of our companies or portfolio companies, always expect dilution. It's one of the major things you should be aware of when investing in private companies. And in fact, expect dilution. Dilution is normally a good thing. What you should be aware of is the price at which the dilution actually happens. That's the important part. So when investing in private equity, you either have a round that happens at the same price, in which case you get dilution but no increase in value, and therefore it's not good for your holding, but the new capital might be good for the actual value in the end. Or you have a down round, which is bad news for investors because that means that they had to sell at a lower price than you invested in which case you get dilution and a decrease in the paper value of the company. But if you get an increase in share price plus dilution, then that is a very healthy sign that the company is growing. And you should expect dilution because the more capital that comes into the company at higher share prices increases the paper value of your holding at the same time as bringing in more cash in order to grow the different business lines. So if you're not getting dilution and you're investing in private equity, then either they are just a very profitable company and they might be paying dividends or preparing for exit, like some of our other portfolio companies, or they are on a growth phase and they should be doing it at what's called an up round, which means that you get dilution, but the increase in the share price means that overall the value of your shares have increased. So yes, if we issue more equity or issue a new token that's backed by more equity, there will certainly be dilution, but the important part is the conversion price or the share price, and that should outweigh any dilution effect in determining the value of your shares. And whenever you invest in a deal on Bank to the Future, that's one of the really important things to understand, that we actually test you on before actually registering on our platform, that you understand that dilution is actually an essential part of a private equity investment.
Yep. So do you want to take one more question?
I think we're done now, so we can save the rest of the questions for next week. So I think that's going to do it all for now. So we've done on 1 hour. Hopefully my laptop won't die. It did last the full battery for the whole 1 hour. But remember to, if you have questions or comments, please do leave them on YouTube. Please head over to our Telegram channel. We're taking on all feedback. I'm actually just going to move very quickly over in the final stage until the laptop dies. I'm going to put my camera off and I'm just going to do some of the real quick headlines from our portfolio companies so that you're up to date with some of the things that have actually been happening. The first thing is, if you are an investor in BitSpark, the company, don't forget that they did post an announcement. Unfortunately, they will be unwinding, so not all of the deals actually work out due to a management change. There was a public article in Cointelegraph and they're going through the audit at the moment to redistribute any assets left to shareholders in line with how that will actually work. So we're very sad to see BitSpark go, and it was a bit out of the blue, but we also have to report some of the things that don't actually work, because remember, this is high risk, high return investing. And of all of our portfolio companies, 8 of them have gone on to become unicorns. Approximately 10 of those have gone down, and the rest are in the middle. And BitSpark, unfortunately, is joining those, but they decided to close early so that they could have some assets remaining, rather than riding those out and diluting all assets. What else do we have? So there's the BitSpark one. Also, 2 of our portfolio companies, Circle and Kraken, did a transaction between each other. Kraken ended up purchasing the OTC desk of Circle, and Circle is looking to move in different directions and remove their trading desk. So that affects 2 of the companies, both live on our secondary market. Also the SPVs, that is. Also, Ripple raised 200 million in a Series C, which meant that those that purchased Ripple Labs SPV got a paper value significantly below the deals that the Series C was done at. So that was very interesting to see. And it's still on the secondary market at a significant discount to the venture capital round. So sometimes Bank to the Future SPV provides an interesting arbitrage between the value of the underlying company, the value of the SPV, and in the case of Ripple Labs, it's also the largest holder of XRP, which is a significant asset that they hold on their balance sheet as well, which creates some really interesting undervalued or overvalued opportunities for our investors to look at when looking at Ripple Labs SPV on the secondary market. We had Coinbase launching a new international cryptocurrency arm, going from strength to strength. Make sure you check out the video on the New York recording where they gave a few more updates on what they're up to, another one of our portfolio companies. Also, Tether, which is part of the Bitfinex group, launched a gold-backed stablecoin. And that's started trading on Bitfinex, so very interesting to see that. And finally, Ripple and Coinbase both invested in Bitso, another of 3 of our portfolio companies. And Bitso made an announcement about their plans to acquire additional abilities to launch in Brazil in different areas of the market. So it's great to see that Bitso progressing, and I'll watch with interest while I'm here in Mexico to see everything that's happening here. So that's all of our portfolio news. That's going to do it for episode 47 of Bank to the Future Live. Remember to like, share, and comment, and so that we can take and address you, and we'll see you this time next week on Bank to the Future Live. That's going to do it.